Hello, and welcome to the Manage Your Property with Ease podcast. I am your host, Shira Ali, and today I have a guest with me. I have Katy Norrell. Did I pronounce your name correct?
Yep.
Yeah.
Exactly.
Yes.
Yep.
Yeah. So Katy, I've worked with Katy for a few years. About 3 or 4 years. You helped me with my property for my residence where I live. And then we've worked together on some others, and I have referred you to some people as well. So Katy's very knowledgeable, and I want her to really talk about, give landlords tips that they can use when they are looking for property coverage, because this is a huge part of like your risk management plan, right? Wouldn't you agree?
Yep. You got to protect your assets.
Yep, to make sure that your asset is protected. So Katy's going to give us kind of some good information, a step-by-step guide here. So Katy, thank you for taking the time to sit down with me and us and share the information. Kind of like a fun fact about Katy, when she sent me her bio, she had in there that she rides horses, I guess, competitively. And so I just wanted to see if you wanted to share like your horse's name and kind of how you got into that.
Yeah, I've been riding for 18 years.
Wow.
Been riding for a long time. And I've owned horses for about most of the time I've been riding. I have 2 horses. I have one named Totoro, and that's based off, I don't know if you guys are familiar with the Miyazaki films, but there's a film called My Neighbor Totoro, and I grew up loving that movie. I named my horse after him. He's leased out to a little girl right now, which basically means like she's renting him and takes care of him and all that stuff. And then I got a new horse at the end of September who I plan on doing upper level dressage with. And right now we're just getting to know each other, and I go there every day. I ride, and it's what I do in my free time pretty much. I'm not selling insurance, I'm at the barn, or sometimes I'm doing both.
Wow.
Depends. Yeah.
Yeah, that's really cool. So I know this is not what the episode is about, but I'm interested. Dressage. So what is that? I'm not familiar.
So I don't know if you've ever seen maybe a little bit of the equestrian stuff on the Olympics, but the dressage stuff is when they're like, they're just in a sandbox and they look like they're dancing around with their riders. So they're performing very upper level like movements where the horse has to balance itself in a way that's not, it's natural, but it's also not. In a way, it's a partnership, and it looks like dancing.
Yes, I have seen that. Dressage. Mm-hmm. Okay, let me say that correctly. Okay. Okay. So that is very interesting. 18 years, that's a long time. And that's good. Yeah. It's good to have something that you kind of different than what you do day to day and kind of take your mind off of things. So that's really cool.
You gotta have an outlet.
Yes, I agree. So okay, so we're going to get into the business. We're going to get into the meat and potatoes now. And like, can you tell us a little bit about how you got started with how you got into insurance, how you got into that industry?
I honestly just kind of fell into it. I graduated college and I was just looking for any job I could get my hands on. I ended up getting an interview at an Allstate agency. When I started there, I was doing just really basic like customer service stuff. And then I was watching all the salespeople, and I'm like, I'd rather do that. And so I ended up going from Allstate. I was there for a few months, and then I went to State Farm. I was there for a year and a half, and I was selling. But the idea of working at a brokerage sounded more appealing to me because you work with several different companies and you just have a broader scope of what you can sell and where you can sell. So after I left State Farm, I went to Weicker Insurance Agency, and I've been there for 4.5 years now.
Great.
Yeah.
So just to clarify for everyone, because I really focus on people who are new to the industry, right? Mm-hmm. So the difference is the brokerage, you can sell policies for many different insurance companies, right?
Exactly.
If you're an agent, is that correct?
So there's direct agents, which are going to be Your state farms, they don't broker out. Farmers, they don't broker out. Like Geico Auto Insurance, they don't broker out. You have to call them directly to get a quote, and they can really only sell their product. Whereas an independent insurance agency can work with several different companies and shop it around for you with all those companies that they work with. Like I work with Allstate. Allstate started brokering out their business, so I work with Allstate. Travelers, Farmers actually purchase MetLife, so we sell MetLife through the Farmers company family of companies. There's some smaller companies like Hanover. There's several. We work with over 20 different companies. So I plug the information in, I check all the rates, and then I send the top, one or two options to the buyer. And I also take into consideration the type of risk it is paired with the right insurance company. I'm not going to pair a home that has it looks like it has maybe an older roof, maybe it needs a roof replacement in a few years. I'm not going to place that home with a company, even though they're giving the best rate. They're going to cancel the policy because the roof isn't up to their standards. So I need to make sure I place that company place that risk with a company that's least likely to give a hard time about those imperfect things about the house. So it's not just finding the best rate, it's finding the best rate for that specific risk.
Right, the right match for that.
Yeah.
And it's all about, I guess, knowing those companies and how they work and what their tolerance is there.
Yep.
Yeah,
and
that's really important.
It takes time to learn. I had to learn in all different ways, finding out like what company is going to be okay with this and what company is going to be okay with that. They all have different underwriting guidelines, and it just takes a little while to learn that. So it's important to work with an agent that's familiar with a bunch of different companies. If you go to State Farm, that's really the only product they're going to understand most of the time, unless they've worked at an independent agency. They're just two different animals.
Right. Yeah, I like working with, I prefer personally working with brokers, even as it comes to mortgage, because they're going to have more options and you can kind of get a variety. That's what
exactly. Variety.
Yeah. Okay, so what information, since you touched on collecting information, what information would a property owner need to have available in order to get a quote from you?
So I have my list here. I don't want to leave anything out. So for an accurate quote, you want to have, for a landlord policy, you want to be able to provide as much detail as possible, such as when will the house be occupied? Let's say it's a new purchase. If you're not going to have a tenant in there for your I'm going to do renovations, it might be 3 months. You're going to need a specific policy that covers a vacant home under renovation. Or once it's occupied, how often is it going to be occupied? Is it going to be like an Airbnb, or is it going to be an annual lease? And then also, I'm going to need to know details on the actual structure of the home. So what's the finished living square footage above ground, number of bathrooms, what type of heating, gas, oil, electric, is the foundation a basement, is it unfinished, partially finished, is it a crawl space or slab, the siding type, the roof type. And also try to get information on the materials used for the siding and the roof, because there are underwriting guidelines for that in every company. For example, I have companies that have a problem with a wood shingle roof or asbestos siding. I want to make sure I place that risk with a company that's going to be okay with those things.
Got it. That's good. Yeah. And so your agent should be able to help you with that information. The listing, a lot of that information should be in the listing. And if you're already at the insurance stage, I'm assuming that you've had a property condition report, you've had an inspection report done. So that information should be there. So don't worry, you don't have to go out and look, and figure it out yourself. There are going to be tools there that are going to help you to do that. Yeah.
Yep. If it's a new purchase, and I work with a lot of people buying new homes because the company I work for is Weichert in their real estate company, and I'm assigned to different real estate offices. So I'm handling a lot of people buying new homes. So I'm familiar with the home buying process, and you can get a quote anytime. If you're just looking at a house and you're wondering how much is this going to cost me to insure, because that's always going to factor into your your investment numbers, right? So you can always just call your agent and say, I'm looking at this house, can I get a quote? And they can work up a rough quote for you. If most of the information is online, that's good. But sometimes there isn't that much information, and you kind of, if you want a rough quote, the agent can usually kind of like finagle it a little bit just to get a rough idea.
Yeah, that's a good point, to really
Mhm.
to have your numbers, to have a good idea of what your
Yeah.
numbers are going to look like, to get that
Yeah.
first. So that's a good point. Okay, so let's talk a little bit about insurance, like how insurance companies are rated. Can you explain why, why that's important to a property owner, and how they can find that information to determine what an insurance company, how they're rated?
So there are different accreditations that insurance companies use. There's the NAIC, there's AM Best, which is probably what most companies use, and Demotech. Those are the ones I'm familiar with. And usually you can just Google the company and find the rating. And you want to look for something usually B plus, B or higher. Most of the companies we work with are A rated, because that's going to represent their financial stability. So that means being able to pay out claims, being able to maintain their rates without, crazy increases, and just being able to stay in business. So that's what ratings really go off of. If you want to find like consumer ratings on how claims are handled, those usually will pop up in your Google search regardless. I want to say that when you work with a broker, they may send you quotes with a company you've never heard of. And you may be like, I don't know this company. I've never heard of them. Are they any good? And the fact of the matter is, not all insurance companies are going to invest millions and billions of dollars on advertising. That doesn't make them any less credible. They just have a different business model, and they probably don't write in every single state, or they have a very specific risk appetite. So if they send you a quote with a company that you've never heard of, it doesn't mean they're not any good. They just have a different business model, and they could be absolutely fantastic. I work with a lot of companies, they're smaller, and a lot of clients are very happy with their service.
Yeah. So I'm glad you said that, because for my home, you recommended a company that I had never heard of. But since having this policy, I've had a couple of incidents. I've had to put in a few claims, and they were remarkable with handling. They were, I was told by the adjuster who came out, independent adjuster, that the company that I have was way better than like the All States and the State Farm at handling claims. So I definitely can concur with that you don't necessarily have to see them on all the commercials, but they'll take care of you, more of a more intimate, setting.
Yeah, they're just smaller, and they have a different business model, and they save their money and put it into their product instead of going, oh, we're going to go ham in every single state and advertise like crazy. So everyone's calling us for quotes, and it's a numbers game.
Yeah, that's important. And so can you give us the information, the companies that you or the sites that you recommend, so I can include that information if people want to look that up? Can you give me the websites for those? And later we can do it after.
Yeah, I mean, one of them, I just have to Google it. So AM Best is probably going to be the best website to look up financial stability. And that's just ambest.com. Demotech is another one you could look up. If a company is not on AM Best, they may be on Demotech, and that's DEMOTECH, demotech.com. And NAIC, do I have a website? NAIC. Yeah, so looks like their website for the NAIC is content.naic.org. But, if you don't have the websites, just type in on Google the insurance company's name and you'll see a bunch of things pop up. But if you go directly to those websites, they'll probably be the most credible option for you.
Good, thank you. That's a good resource, good resources. Okay, so you did touch on a little bit on, you mentioned a landlord policy. What is the difference between a landlord policy and your regular homeowner's policy?
So they are similar in that they both should cover the amount to rebuild. If there's a total loss, they should both cover the amount to rebuild the home today. That's what replacement cost is. So other differences between the two is that on a landlord policy, one would only need to cover belongings that the landlord is responsible for, like maybe items used to service the property, a lawnmower, snow blower, or appliances, dishwasher, washer, dryer. A landlord policy's liability coverage is only for the premises, where a regular home insurance policy covers you and your family members, regardless if the occurrence happened on the property or elsewhere. That's really the main differences between the two. A regular homeowner's insurance policy is going to cover a larger amount of personal property. Usually a landlord policy, you're not going to have that much personal property because, you're not living there. Unless if you furnish it, that's one thing. And then a landlord policy will cover loss of rents if your tenant can't live there. So that's similar to loss of use in a home insurance policy, where if your house has a fire and you can't live there for a while, your insurance company will give you a certain amount of money to rent a hotel or live somewhere else and buy some belongings and, toiletries, whatever, while your house is being repaired. So those are really the main differences. It comes down to the differences in liability and personal belonging coverage. Otherwise, they're very similar.
Okay. So that when you're saying loss of rent and that the tenant cannot use the premises, that's because of damage, not that the tenant's not paying. It has to be because due to damage, they can't have it. It's uninhabitable,
right?
Right.
Because you can't charge rent in a place, they can't live there. You don't charge rent. So,
Right.
So let's say there's water damage and now there's mold and they got to do remediation. Don't know how long it's going to take. Tenants, like, they're going to go live somewhere else for a little bit and the landlord's not collecting rent. There should be amount of coverage to reimburse the landlord for the amount of rent that they're missing out on.
Got it. Yeah, good. That's good information. So when you have now, now you have your quotes, you have multiple quotes there in front of you. What's the easiest way that the property owner can compare those quotes to know that they are like apples to apples?
So you want to look at the amount given for replacement costs. That's usually the dwellings or coverage A. And you want to make sure that's the same across all the quotes. And if not, you want to ask the agent why, because agents use a special tool and each company has their own to calculate the amount to rebuild the home. And one company may give a slightly higher amount, or one company may say a slightly lower amount. But if you're looking at several quotes, you really want to make sure that they're relatively same across the board. So you're making sure that it is apples to apples. But on top of that, you have to look at your deductibles. You're like, wow, this rate is so much lower, but it has the $5,000 deductible, and that's why it's lower. If you made it 1,000, it probably would go, way higher. You have to look at the amount of liability and the endorsements that are also given on the policy. Same thing. You may look at a quote and it's much cheaper, and that may simply be because that agent did not put on all the endorsements that another agent did. So you want to make sure all the coverages are relatively the same when you're comparing rates. And that's the good thing about an agent, is they basically do that for you. And I tell clients, if you do get a quote elsewhere, please send it to me. I would be very happy to help you compare. It's overwhelming for you, I understand. So a lot of people do that, and I'm not going to steer them away from a policy that maybe it's elsewhere, it's clearly more competitive and, you know, similar to what it can offer. And I'll go, you know, that's in your best interest, and that's up to you. So if you're working with an agent, you can always turn to them for help on that.
Yeah, I stress the importance of like looking to the experts in that for whatever that industry is.
Yeah.
You should always have people that you can defer to. So when you say endorsements, can you give a little more information on that for people who don't know, when you're saying compare endorsements or they didn't add those? Can you give a little more information?
Sure. So there's always basic policy coverages that are included, like the dwelling coverages and other structures, loss of rent, liability. Those are always going to be included. Anything else is going to be extra. It's extra to endorse replacement cost on contents. If you have any personal belongings in that property you want to have covered for replacement costs, you got to have that endorsed. And then there's a water backup. If a pipe bursts and damages your flooring and walls, or anything, any pipe overflows, that's coverage to repair the flooring and the walls. And that's an extremely common claim. You want to make sure you have that. If you don't, you'll be responsible to repair. And then some companies offer equipment breakdown and equipment breakdown and service line coverage. Equipment breakdown covers a mechanical or electrical breakdown of a major appliance. It has to be sudden. It's similar to a home warranty, not quite as comprehensive, but it's something usually pretty inexpensive to throw on there. And if you have an HVAC go out on you, it's an electrical short and it fries, that would be a good time to put a claim in for that, because we all know how expensive HVACs are. And then service line coverage or buried utility line coverage, companies may have different names for it, it's the same thing, cover the utility lines, electrical, plumbing that run underground from the house to the street in the event they need to excavate and repair. That's coverage for that too. Not every company offers it, but if they do, we try to throw it on there for like a single family, or, you know, like a standalone house that's not connected to anything. Condos don't need that, you know. So.
Right. I need to check. I don't think I have the mechanical, like, I don't know if I have that, but as I'm thinking about that, can you remind everyone how often they should be checking their policy and reviewing their policy? Because I think a lot of people, they pull it out when something happens, but you want to be checking that. So I'll let you give guidance on that.
Yeah, so clients are responsible for checking their renewal every year. Our agency tries to reach out to every client at renewal to do a review to see if they need to change anything. Maybe they want to shop around again. But anytime you receive a piece of mail from your insurance company, paper mail, look at it because you never know what it might be. And always look at your renewals, compare it to your previous year. If it went up a little bit, it's completely normal. Inflation's crazy right now. Everything's going up. And I always recommend stay with a company as long as you can before shopping around. If it went up a few dollars, you're not going to save that much money usually you won't save that much money by shopping around if your rate's already competitive. But you could always talk to your agent if you need to save money. There might be changes you can make to your policy to reduce the premium temporarily, or, you know, for long term.
Yeah. So do you recommend maybe 30 days, 60 days before your policy renews to start getting that or working through that process?
Yeah, definitely, because you want to have enough time to make those changes and give the agent enough time if they need to shop around, to make sure they, do a thorough job and check with all the companies they can and offer you a better rate or a different company. Usually you should get your renewal in the mail, or if it's emailed to you, it's usually mailed to you. You usually should get it 30 to 60 days before your policy renews. So always maybe just mark on your calendar when your policy renews and put like a date 30 days before to make sure you're keeping track of that. Because if something happens and you just don't receive the renewal in the mail, or you don't receive the a bill, you need to keep track, because things do get lost, stuff happens. And a lot of companies nowadays have apps and online accounts you can hop on and just check it every so often. So looking at your insurance every month, just taking a peek at it, checking your bill, all that stuff is a good idea, just to keep everything in good order. And if something happens, to catch it sometimes before your agent does, because obviously agents have thousands of clients. We can't be keeping track of every single bill. And so it's good to just keep on top of that yourself. And of course, your agent may call you if something pops up too.
Right. Yeah. You've been helpful with that when I've had questions about this or that. You're always so good to respond. So I do want to remind everyone that even if your policy renews, right, and you want to make a change, you can make a change in the middle of your policy.
Yeah. Oh, you can make a change. You can make a change anytime. You'll pay the difference in premium, or if it's lower, you'll get a refund in the mail, or maybe you want to shop around in the middle of your policy period. There's no problem with that either. You would just start the new insurance, and then you would get reimbursed or refunded whatever insurance you paid for but didn't use. And that goes with most insurance policies. There's very few policies that are standard that will require an earned premium, is what it's called.
Okay, so an earned premium is when...
So if they say, let's say your policy, you have a home, it's in disrepair, you couldn't get a standard insurance company to insure it, and it had to go to what's called the excess market, which takes on higher risk properties like that. And they usually have what's called a earned premium. It's usually around 25%, which means they won't refund you less than 25% of the premium. Even if you cancel it a month into the policy, they're not going to prorate it to a month. They're going to say, we will refund you the difference after 25%. So if it's $1,000 a year and you cancel it a month in, you're still going to get reimbursed the difference, subtracting 25%, which is I can't do math, 750, something like that. So that's what earned premium means. But that you don't run into that really unless you're in the excess market. So we're standard policy with any of our companies like Travelers or Allstate, Hanover, they're not going to have that. I just want to put that disclosure there in case someone has an excess policy.
Yeah.
They try to cancel it in the beginning, and if it's after 25%, then you'll get a normal refund back. Yeah.
Yeah. Okay. Can you just really quick, you opened the door there before we move on to the renter's insurance. To be in an excess market, is there a specific type of property that people should look out for that may put them in that pool?
So yeah, the excess market is for higher risks, right? So it might be a house that was declined or canceled by other companies because it has a bad roof. It might be because that client has just too many claims and no standard carrier is going to take it upon them to insure them for a little while. It could be just a particular risk that's hard to place in the standard market. Maybe it's an Airbnb right next to the beach that has like that allows pets and has a pit bull. You know, there's risks that standard companies are going to shy away from. And if you run into a situation where you can't find one, you have to go to like an excess market like Lloyd's of London to get insurance placed on that property. And sometimes like the claim, like if you have a lot of claims and you get canceled and you can't find new insurance, then you're probably going to have to go to the excess market for a little while until those claims become 3, 4, 5 years old.
Yeah, got it.
But I run into a lot lately. I have a lot of investment landlord, you know, people investing in multifamily homes, and they're buying them cheap, you know, under $100,000 a year. But if those homes are in disrepair and those repairs are not made, then there's a chance your standard company would cancel you, and you have to end up going to the excess market if you want to have any coverage on that property. So it's important to keep that in mind when you are looking at investment properties, is the condition of the home.
Yeah.
Because insurance companies, they're going to go out and they're going to inspect. There used to be a time where only certain companies would inspect after a certain amount of dwelling coverage, but most companies are going out and looking at houses after the policy is purchased, not before. After the policy is purchased, they go out maybe within 60 days and do an exterior inspection. And if there's no issues, they leave you alone. If they go, oh, there's, you know, lifting shingles on the roof and we need you to repair this within this amount of time, they'll let you know. So just keep that in mind. There will be an insurance inspection after you purchase a policy too.
Okay, that's good information. That's good.
Yeah.
Okay, so let's move into renter's insurance, because this is a hot topic a lot of times with landlords, that they don't know really why they need it, why they need to require their tenants to have it. So can you just tell us a little bit about renter's insurance and why landlords need to be concerned about it? And then how landlords should be listed on those policies?
So renter's insurance is going to provide coverage for the tenant's personal belongings and also provide the renter with their own liability in the event that the tenant is liable for damage to the property, or someone gets injured on the property. So this helps reduce risk for the landlord and the tenant, because they both have their own insurance on the things they need to protect and get reimbursed for if there is damage or injury. So they're also protected in the event someone tries to sue either of them for an occurrence on the property. So it's really about mitigating risk on both ends for the tenant and the landlord, because if the tenant doesn't have insurance, and someone gets injured on the property, they could go after the landlord. And in that situation, you want to make sure you have coverage. And if the renter doesn't have coverage, they may be, you know, out of luck with covering those litigation costs. And renter's insurance is only usually $100 to $200 a year. So it's totally worth it to have it, and also require your tenants to have it as well. Usually, I see landlords requiring just $100,000 of liability. I usually increase it to $300,000. You're talking about maybe $5 a year extra to increase that amount. So it's like a happy medium for every tenant to have $100,000 to $300,000. For the average renter, it could be more depending on the property.
And do you can you help with those policies for renter's insurance?
We can help with renter's insurance. I do regular home insurance. We do vacant homes, car insurance, jewelry, umbrella. I do pet insurance, life insurance, mostly any type of insurance you would need. I just don't handle commercial.
Got it. Okay. And then how should landlords be listed on that policy? So the tenant says, okay, I have the renter's insurance now, but I know that there's a specific way that landlords should be, so that you also get the notifications if something were to happen, if it lapses.
Right. So landlords should have whatever entity listed on the policy that owns the property or is responsible for it, whether it's a personal name or an LLC. They need to be listed as an additional interest, not an additional insured. They're very different. Because when you're listed as an additional interest, then you'll get notified if the policy is in force, if there's any changes, if it lapses. Landlords don't want to list themselves as an additional insured because this could be a conflict of interest in the event of a claim and can muddy the waters on liability. Because when the landlord lists themselves as an additional insured instead of an additional interest, it means that landlord is covered under the renter's insurance liability coverage, which, if the tenant needs to put in a claim, then the landlord's going to get dragged into it too. So always be listed as an additional interest, not an additional insured. Because I do get letters still that landlords asking to be an additional insured, but I know they mean additional interest. They get mixed up all the time.
Yeah, that's a good, thank you for clarifying that, because there's always confusion with what, how they should be listed. So, entity name, additional interest.
Yep.
100 to 300,000 window, whatever your
for the liability for
liability.
Average renter.
Yeah, got it. That's good. Okay, so I believe we covered everything that I wanted to touch on here. Oh, you know what we didn't cover? General rule of thumb for insurance. How much does that owner really need? What is too much? If we can just, to circle back there.
Yeah, of course. So when you're purchasing a policy, your agent should do this for you already, but you should have enough coverage, building coverage, to replace the home or rebuild the home for what it would cost today. So you want to not go off the market value of the home, because that's not going to represent rebuild. That's just market value. It takes into account land. You want to actually be able to use the insurance value to rebuild. And agents have a special tool they use to determine this amount using the characteristics of the home. And you also want to have enough liability to cover your assets in the event you are sued. And another rule of thumb you can use is having at least the mortgage amount, the liability high enough to cover the mortgage amount. If you're not thinking about all your assets, have enough liability on the policy to at least cover the mortgage if there is one. And to be fully protected, you may need to purchase an excess liability or umbrella policy, especially if you have multiple assets under your personal name or under an LLC. So when you're purchasing a policy, you want to always ask for at least 100% replacement cost coverage.
Mm-hmm. Yeah, replacement cost versus the cash value. Is that what it? Yeah.
Actual cash value policies, I don't sell them very often. Really, I don't sell them at all, because they're not very good, and you're not really saving that much money by purchasing one. It's not going to make you whole again in the event you have a loss. They're not going to pay out the full amount to rebuild or replace damages to your home. So, because they're only going to cover the actual cost of the home or the market value of the home less depreciation. If you have a boiler and you buy a new boiler, it's $10,000. They're not going to give you that amount. They're going to go, well, your boiler is really old and it's only worth $500, so we're only going to give you $500. So that's why it's important to have replacement cost coverage. Otherwise, you're going to be stuck paying the difference between what the insurance paid and what you actually need to go out and buy new stuff. And like I said, you're not going to save that much money buying an actual cash value policy.
Yeah, that's good. That's good information. Okay, now that really, I believe, covers what I had. Did you have anything else that you wanted to add?
No, I think we covered pretty much everything. I can help people all over the United States with insurance. I write insurance in all 50 states with several different companies. So I'm able to help a lot of different people, not just the ones that are buying homes. And anyone could reach out to me even to just ask a question. Even if you don't want to quote, you just have a question. I'm always open to help people out with their insurance, because I think it's just so important to cover your most precious investments properly, because if something happens, you don't want to be worrying about whether or not you have the right coverage.
Yeah, I agree.
Yeah.
And I can attest, Katy will answer your questions because she answers mine, and she's patient with me. So, definitely be open to do that. And I'll make sure and include your information in the show notes so people can reach out to you. And I just want to thank you for taking the time. I know we all have busy schedules, so thank you for taking this portion of your day to sit down and kind of educate us on insurance. So.
Yeah, thank you so much for having me. This was actually a lot of fun. I've never done a podcast before.
Yes, I'm glad. Yeah, it's like a conversation, right? You're just talking and talking about what you know already. So,
yep.
Yeah, good.
Awesome.
Okay, well, thank you.
Thanks, Shira.
All right, bye.
Bye.